In this session, let us understand what is retention money guarantee. In banking, you will come across customers who are undertaking construction contracts. While these contractors receive payment from their employers, certain percentage of the payment will be retained, and generally it will be like up to 10% of each and every payment. That retained portion is called as retention money. But the problem with retention money is that this is going to affect the cash flows or liquidity of the contractor. So what's the solution? Whether employer will compromise retention money? Answer is no. Employer will not compromise retention money, because once the contract is completed and if defect is identified, then that defect will be either adjusted against the retention money, or contractor have to rectify the defect to get back the retention money. Okay, so that's the very objective of retaining portion of payment. So they are not going to agree. So what's the alternative option? In most of the cases, employer will accept guarantee instead of retention money, and this will be equal to retention money in general. This guarantee will ease the liquidity in business, and when this retention money guarantee will expire, it will expire when the project is completed, that too to the satisfaction of the employer. But of course, later on this retention money guarantee will be substituted with maintenance bond or maintenance guarantee for some more period. That is, after completion of project, generally it goes up to 1 year for maintenance period.